Hello traders. Welcome back to the channel. In today's video, we are doing a post-market analysis to see how our pre-market levels reacted in today's session. Were they accurate? Did they help in making profitable trades? Let's break it all down with clear and precise insights. 23,200 CE, call option analysis. As we predicted, the intraday resident level at 394 rupees and 60 paise acted as an initial support, and the price bounced from there. Once it broke 456 rupees and 68 paise, which was our strong resistance, we saw a great bullish rally. The price reached a high of 496 rupees and 95 paise, showing clear momentum. However, it couldn't breach our major resistance at 593 rupees and 60 paise, which acted as a strong ceiling. This level was already marked in our pre-market chart, proving the power of planning ahead. 23,200 pay, put option analysis. Now, let's talk about the put option. Right from the opening, it struggled to hold above our 456 rupees and 68 paise resistance, and once it dropped below, the selling pressure increased. The most crucial breakdown happened at 280 rupees and 20 paise, which was our marked intraday support level. As expected, after losing this level, the put option fell straight to 108 rupees. This confirms that our levels were spot on. Our pre-market resistance and support levels played a crucial role in price action. Call buyers got a breakout above 456 rupees and 68 paise, leading to a strong rally. Put option confirmed a bearish move after losing 280 rupees and 20 paise, following a clear downtrend. This proves once again, having the right levels before market hours gives a big edge in trading. If you found this analysis valuable, don't forget to like, share, and subscribe to the channel for daily market insights. Let me know in the comments if you used these levels in your trades and how they worked for you. See you in the next video. Trade smart, stay profitable.